better than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me.
Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host, Nathan Birch. This is a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Today I have a special guest, Gemma.
Hi.
You guys and girls may know Gemma from our investor relations team. And today we have lots of different things to discuss. And Gemma quite often comes to me with lots of questions that people ask me. And she goes, Nathan, answer this. So sometimes I try and answer questions for her inside the podcast so we can get best use of the time. So today we're going to be looking at what is happening in the property market, what predictions may look like for 10 years' time, what would drive those things over the course of the next decade, and then towards the end of the podcast, Gemma's going to ask me some questions that I'll answer on the spot and give you guys some feedback as to why and how I look at things. So I guess introduction to Gemma, you for those of you that don't know, because we're on the podcast now, like you're on the Facebook Live quite often, and I thought...
Are the audiences different?
I think so.
Oh.
Yeah, I think there's like different people that don't watch Facebook and they come in here and vice versa. So maybe if you want to give just a really short, brief intro on yourself, what you do in the business and how you help our investors.
So I'm Gemma. I'm with the investor relations team. I help people build multi-property portfolios. We're kind of like your right hand. You can't spread yourself amongst thousands of people that we help. So we, they're an extension of yourself. So we take people through the discovery session, right the way through to settlement, and everything in between, finance, the map sessions, everything like that. I've been with you now, I think, nearly 3 years.
3 years.
It's a long 3 years. But it's been good. No, I've learned a hell of a lot. I came to you very indoctrinated.
She was very indoctrinated.
Yes.
The first day that she came, I was drawing some numbers on the board. I have to say this every point. And I was like, this chick, I don't know if she's going to last day. Like this,
I was looking for the exit. I'm like, oh my God.
I was like, the same door you came in. No,
yes.
I didn't think that would be fun. But
it's been fun. It has been fun. God, it just sounds like I'm leaving. No, but I'm still learning every day, which is what I strive for.
What would be, this isn't something we talked about today, but it was like,
Great.
What would be like some of the three things that you'd think that you've grown by in the last 3 years, right? So like things that you've been awakened to. I don't know, we can go down conspiracy rabbit holes, but like things that you're like, fuck, I didn't think that was possible. Like I know the first thing you said, you can't buy a property for 15 grand, and you laughed at me and said I'm full of bullshit, right? And then we drew it out.
Let it go.
But what other things would you have like changed? Like your mindset changed, or what would you change in the last few years?
I would say I've always been one to ask questions, but I wasn't asking the right questions. Okay. So I think just typically looking at the world for what I'm given to be the truth. It's always been in me to ask the questions, but there were some things that you were never taught to question. Yeah. So I think literally opening up the world to me was terrifying. But that is one. I would say my emotional intelligence has increased. And I think that's purely from, part of it is from the nature of what we do. Yeah. It's just numbers. Take your emotions out. I was, and in many ways still am, quite an emotional person, but I'm learning how to separate when it's actually not helpful. Yeah. It's not going to help in any way, shape or form. It actually makes it worse. Yeah. And number 3, what else? I would say just the wanting to grow and be open to new ideas. Like not everything is what it is today, and then that's it. Even like who we are as people. Yeah. We are who we are today, but in the next week, 2 weeks, 2 years, we could be quite different and very different. Yeah. And not only is that okay, but it's also necessary because the world changes. So
it does, and you need to be fluid to be able to change with the world and the surroundings and with. And the last few years has taught us that just naturally with all the things we're being faced with, funny enough, in the world. One thing you said there as well, like just about your emotional, like when something bad, like we all come across adversity, and sometimes people come to me like, oh, but you wouldn't understand. It's like, mate, you've got one problem, I've got 100 problems, right? And it's like, it's just how I view it. And
sometimes I actually go the other side, and in 100 years we'll all be dead.
Exactly.
And so sometimes even the things that are really serious in 100 years we're not all going to be here,
Exactly.
and no one's going to give a shit.
Exactly.
So then that really removes all of the stresses. Even if you go bankrupt tomorrow, like
Yeah.
you're going to be dead in 100 years, it's fine.
Yeah.
I don't know if
Right.
that's positive or negative, or is it just avoidance? But
Yeah.
for people that it's really hard to bring down from that emotional state, I've been in those states. Sometimes it's something that extreme that can take you out of it.
Exactly. So it's all in perspective. So I guess some questions for you. What's the highlight of your week so far?
The highlight of my week, it's the Elvis Festival in the Blue Mountains.
Okay.
This week.
You like Elvis?
I love Elvis. I was actually thinking on the Facebook Live, one of the questions is something that no one knows about me.
Yeah.
So we've done the bongos thing, we've done all these, I love animals and travel and all that stuff. But it's kind of like a dirty little secret. I love Elvis Presley.
Actually, I do recall this because it's an Elvis Festival, and I've got a motel thing. Well, they all get packed out
Yes.
over that period of time. Yeah, so it's very busy, very popular. Okay, there we go.
So yeah.
What takes a lot of time, but is totally worth it?
Well, I had an answer prepared,
Yeah.
but you've actually jumped the gun. It's the self-work thing. So it's taken 3 years for me to improve. Well, obviously you've been improving your whole life, but I think
being conscious of it.
Yes, that's the issue. It's knowing where your flaws are, accepting them, that it's okay to have them as long as you're working on them. So I think, self-work and, all the hippy-dippy stuff of self-care is important too.
Yeah.
But to actively try and grow can take a hell of a long time, but I think it's totally worth it.
It's important.
Yeah.
If not, you're just going to be, And the third question is, what does having a no BS approach to life mean to you?
I would say it's just being authentic, honest, calling it for how you see it.
Yeah.
So I did see what you were saying as complete bullshit when I first met you.
But the gap was the being open and questioning, right?
Yeah, but on your first day of work, you probably shouldn't be that open. Do you know what I mean? Like, it shouldn't just fall out.
I've never had it happen before, so it was pretty fun.
But I think that if anything else, it may have been rude, it may have been inappropriate, but it was authentically me because I just didn't. I saw it for what it was. So I think just not sugarcoating and not pretending something is what it is when it's not.
A lot of people go throughout life believing what they see, listening to the TV and all that sort of stuff. So it's like believing in it, and it's So I guess thanks, Gemma, for that. And I guess the topic on a lot of people's minds and people asking on a regular basis, like what's happening in the property market, right? Where's the property market going, and all that sort of stuff. And I'm not a big fan of the stats and figures because they can be manipulated a lot. And the other week we pulled out the CoreLogic RP data information which showed about house prices falling and house prices going up and all that sort of stuff. And it's a very different sort of report this week when we go through. So we've got here the Prop Track Home Price Index for February 2023. And it goes to key highlights from the February 23 report. In February, the national home prices rose 0.18% as limited supply and sustained buy demand supported property values, right? So that's pretty interesting. It says here the housing market downturn still February to sit at 3.9% below their peak. So nationally, they're saying that the house prices are there. And I find it interesting, right? Because we're going to go through and do a bit of a run around each of the states. And I spoke about this on a previous podcast recently. It says here nationally, monthly growth is 0.13% higher, with a median house price at 792,000. If we look at capital cities, it's up 20 basis points, so 0.2%, at 871. If we look at regional areas, it's pretty neutral, it's 0.04 negative, so it's just neutral. If we look at the states, like Sydney is up 0.27%, Melbourne is up 0.15%, Brisbane is up 0.09%, and these stats can be manipulated as much as you want. But what is that house price based on, right? And the house price is based on the fact that they've got a pool of property, right? And it's just the median of that. So it's the median sort of price ranges there. So we're in a market now, and people can't service as much as what they used to be able to, so they can only afford to get a loan of X amount or whatever. And what we're seeing is a shift, and I've always said this is 14 years this month in business of B.Invested's been around, and I've always said that well-priced foundation properties, the good bread and butter stuff, they're a recession-proof property portfolio. And people are like, I want to mix it up, I want to buy a development site, I want to build a duplex, I want to do this, I want to do that. But they steer away from the fundamentals. And in times like now, the properties we buy, 200 grand, 100 grand, 300 grand, 400 grand, they go phenomenally well because people, their budgets are getting reduced, right? So there's a lot more people out there in the market, and that's why we're seeing these prices rise, and we're seeing that we're losing properties from getting gazumped because there's more buyers at 200 grand than what there was beforehand because they can't afford to spend 600 grand or $1 million. So as more people are buying the cheaper properties, that means that the median price is being pulled down. It doesn't mean that the same houses that sold a year ago are now selling for 20% cheaper, 10% cheaper, whatever. It just means the median price. So there's more activity happening in the lower end of the market. So these stats are very wishy-washy and flimsy on that front.
But I think there's also a comment to be made. It's because for some people, I think having that that calculation done can be you get quite lost in that.
Yeah.
The easiest thing I described to someone this week was they wanted to just buy in CBD.
Yeah.
But then when you're speaking to everyone that are renting or they're trying to buy, they want to get out of the CBD because it's too expensive.
Yeah.
And so, not to jump ahead, but if we're looking at where we buy or what we kind of buy, that diversity, if you're covering all bases, if you're just in the CBD and this starts happening, everyone's going to try and come out. Yeah. And if you're not covering your bases there, it's
so a diversified portfolio.
Yeah, for sure, 100%.
Yeah.
But yeah, it's just that the price is going up is drawing people out of the CBD. So the preconceived ideas people had are no longer relevant because the CBD is not necessarily the best place to be.
Yeah, exactly. And if we look at some stats, all right, we've had 3 investors that are selling their properties, just a property in their portfolio in the last week that I've given advice on, which were properties that we bought around the time that you started. And everyone can go and check this out, right? We talk about locations of properties, but those locations of when you probably wouldn't want to be buying in those areas, right? Yeah. So South Headland, right? Terrible place if you look at stats, right? If you go to all these stats and look up South Headland, you'd see that the price dropped from $600,000 all the way down to $50,000, right? So it lost 90% of its value, right? And for our investors at the bottom of that market, we saw that there was a commodities boom coming, we saw inflation coming, we saw stimulus packages coming in, and we took the chess piece and we moved on some of those properties, and we're paying like 50 grand and $60,000 for properties in these locations. And with some of the investors, we're now seeing that they're selling for $200,000, $220,000, and that has gone up 4 times, 400%. Right? People say you can't go and make money in a regional market, you can't go make money in a mining town. We buy predominantly our properties in major capital cities, right? Like I had someone yesterday, first-time client, that said, I want to make sure the properties are buyer in blue chip. And I said, okay, well, where do you define blue chip? He goes, just not regional areas. I was like, okay, cool. I was like, so the Gold Coast, this person lives on the Gold Coast. I was like, the Gold Coast where you live, would that be a blue chip area? He goes, of course, I'd love to buy here, right? And I was like, well, I was the largest buyer for 7 years in the Gold Coast. And I asked, Chevron Island is Tugun a good area? I'd love to buy in those areas. I was like, well, I was paying 160 grand, $200,000. Even when you come on board, we'll still pick it up much lesser amounts there. But those properties are now selling for 500, 600, 700 grand. And those areas, going back 5 years ago, 7 years ago, were deemed as rubbish, right? They were like volatile and all those things, but we bought in at the right value because there was a lot of value there, and those things have tripled in value. So if we look at Sydney, some properties have gone up and tripled in value. Some properties are cheaper today in 2023 than what they were in 2016 by like 25%. The areas that we're looking at, and they're very large migrant sort of filled areas, and the migrant areas had issues when Corona came on, because people weren't migrating and there was lack of people in these locations, and it softened the market. But as we turn on, open the floodgates and people start migrating, those areas are starting to boom again. So it's important to take everything into consideration. And if it could be a little mining town that's gone up 4 times in 3 years, right? No house in no blue chip area of Sydney has done that. And it's important to take it all in as an overall strategy.
Well, it's the timing.
Yeah.
It's every single market is the timing. And if you're going to go into a mining town, for example, is just a random example. If you buy at the top, if you bought at 600 in South Headland and it's now sold for 50, you'd be spewing.
Sure.
Of course.
Yeah.
But if you just flip it, you flip the timing.
Yeah.
Well, then you're laughing.
As a contrarian investor, that's what
100%. Which sounds so normal. I've noticed. To me, I didn't know any different, right?
Yeah.
Contrary, well, of course you would buy at the bottom.
Yeah.
But the more you talk to people are still trying to buy in the Gold Coast now. And I'm like, what are you doing? But to me, it's obvious.
Yeah.
And to a lot of people, you would think you want to buy it when it's cheap. But where is that? How is that? What's the time? Is now the right time?
Yeah.
And I suppose that's where people like you come in.
And it's like, let's take property out of the situation. We can compare it to any sort of market, right? You go and look at cryptocurrency, right? Just random. And Bitcoin fell at the start of 2020, and Bitcoin had fallen to like 4 grand Aussie or something like that, right? And everyone's like, oh no, that's bad, whatever. They're scared because the price had crashed. But then it went up to 70 grand, 80 grand, 90 grand. Everyone's like, oh, I can't wait to get a Bitcoin. I'm selling my super fund. I'm doing whatever I can to get Bitcoin. It's like, you want to buy it where it's never been that high beforehand, right? The Bitcoin at 90 grand could come back to 4 grand quite easy, right? The chance of it going to 500, if it went to 500 grand, if it did, right, that would be 4 times growth, 400%. But if it went back to where it was 6-12 months prior, it would lose 2,000%, right? And people don't realise that when a property has been going up in value, that the downside risk is far greater than any upside potential. And when we're picking it up from the bottom, the upside is far greater than any downside because the risk has been removed from the deal. So look at stats, but have a good, solid overall strategy. And you shouldn't be going out, I'm not saying go buy in South Headland like we're telling some of our investors to sell those properties now, but as an overall strategy, like I sold properties in the Gold Coast last year because I bought them and they've done their thing, and I don't like selling properties and I'll regret it in the future, but I bought my dream up and that was important. So it's important to work out where you are in your portfolio and what actions you need to take in order to get to that next level. And I don't think a lot of people plan for that. They're just looking at, what's the news telling me? What can I be consuming, instead of asking the questions and understanding what's going on in the market. And,
But that Bitcoin example, it's almost like we need to have they need to have the proof first.
Yeah.
Which
it's too late.
Exactly. You've
Hindsight's a wonderful thing.
Yes, and I think maybe it's emotional. It's a fear, like what if I get it wrong or whatever. So I need to see it, do it first.
Yeah.
But then that's literally counterintuitive. Yes, it's counterintuitive. Yeah. So maybe that's something for people to think about. If for every decision, what is the emotion that I'm ruling with it and taking it out?
Yeah.
And then, okay, what's left? Okay, well, it's the numbers. That's what we need to look at. So it's interesting psychology.
Logical decisions, because people make irrational decisions in FOMO and fear and greed and all those things. And I think we're in a market now where there's lots of changing things and people are fearful and they're making silly decisions. I get so excited by that because those silly decisions create opportunity, right? And that's just before the podcast started, I was talking about I've been trying to find this mad office, right? And I found one. I'm just trying to throw some terms at it. Who knows if it'll happen or not? But it's a $6.5 million office, right? And we need to get to a bigger office, and we just can't find them of that size. But if it was 6 months, 12 months ago, it would be a different story or a different conversation. I'd be told, piss off, we're not even having that conversation from the agent. But now it's like, well, let's go back to the agent and see what they have to say. And there are opportunities that come our way because of,
I was speaking to a real estate agent a couple of days ago, and they were talking about they admitted, it was like, oh, we're seeing some sellers getting a bit desperate now when the interest rates go up, because I was talking about the interest rates just gone up, and they was like, oh yeah, it's getting hard. And I was like, it's great, like we get excited because this is now our playground. More people exit, and
why would you want to buy like at the highest? Like, it just doesn't make sense. Like,
it doesn't, but people do it. I don't know. I don't understand why.
We need tenants, right? So if people aren't buying and they're being scaredy cats, we've still got people, and like I don't mean to be smart ass by this when I say it, but there'd be people watching our videos and our content that would be still sitting there waiting for the market to fall from 2020 and done nothing. And you know those people because you've spoken to them and they've had conversations, they want to do things, but something between their mind and their action and you know is not gelling for them to actually pull the trigger and make things happen because they've got a different story going in their head and it's reprogramming yourself to go, okay, this is
No one ever says that I wish I waited.
Yeah. People say, I wish I bought more or I wish I didn't sell and all those things. So.
And a lot of people this week have said that I wish I bought a couple of years ago or whatever, but hindsight's a wonderful thing. Yeah. So I lend that knowledge, I lend that what people are saying to those people. They're waiting for COVID to be over, they're waiting for the vaccine to roll out, or waiting for all of these different things to happen.
Sometimes it's easy to have an excuse.
Yeah.
Right? It's easy to have an excuse. And I don't think any time in my life it's ever been right. Yeah? No time in your life it's ever been right. And you think back and you just go, well, I've just made decisions happen. I've had to create that environment and people need to do that. So, another topic for discussion today is where in the country is the best place to buy. Everyone always loves saying, where should I buy? Where's the hot spot and all that, right? South Headland.
Give us a call.
Right? Give us a call, right? Everywhere around the country is good. There's opportunities, right? We're buying in every state, whether it be Queensland or New South Wales or Perth, or Western Australia, or South Australia. There's markets within markets, and there's good times and bad times. Like we're in Sydney, and we've got house prices where you buy a house with no eaves for $1.5 million and 300 square metre block, and people are very trapped in those houses, right? I can't see those things doubling or tripling. It's the same as buying in South Headland for 600 grand many years ago, right? But we've got areas in Sydney which you can pick up for under 300,000, right? And those markets are moving today. So we could sit here and say Sydney's no good to buy, but you've got different locations and different property types and different markets and different demands to those markets. And I guess it's just a matter of working out where the value is on the day and how does that fit in line with your goals, and should you be taking that deal, and that's what we specialise in. So. Yeah,
I think people get very caught up in I just want CBD, but I just want to buy in Queensland, or I don't want to buy in New South Wales, or either way. There's so many different opinions. But again, it's wondering, why do you want to do that? And I have to ask, why do you think that? I just need to find out, because if you park everything into one state, it's obviously dangerous, but they're not taking into consideration your position is different to my position, to the next person's, to the next person's. So it's not, I think that's emotional as well. Sydney just sounds really good. Well, that's fine. It can sound really good and it looks really good when you show your friends, but is it actually getting you to where you need to be? And I don't think people are removing themselves enough from it. Get out of the way and follow where you need to be. So it's interesting.
There's different phases. I'm actually going to do a podcast after this, which I'm going to talk about the different phases of my journey that I've been through, right? And different what I've needed to buy at different times. There's times when I bought heaps of land and I've gone, oh shit, my cash flow's out of whack, right? And there's times when I've gone and bought heaps of cash flow stuff and it's like, hey, I've got too much of this asset now, I need to buy something different. And you just need to work out what you need for the next level of your journey. And it's like taking a trip to wherever you're going. Let's say we're going to Cairns. Is how would you get to Cairns, right? And I use those examples of how to fly there and all that. But it's like, okay, well, what vehicle is going to get us there, right? Like specifically, can I drive a push bike there, right? It's not really going to, it's going to be a lot of pain if I do it that way. The push bike and walking is probably people having a job to get financial free, right? No billionaire became successful going, I had a good job and I saved all my money. No one saves, no one has that. So you need those leverage items to get you to a certain part of your journey, but then you need to switch vehicles and have that strategy, and that's what we specialise in. So, as we wrap up the podcast, got a lot more questions here, right? So these are questions more for you. A random one is, what I see all these people that are entitled on probably ABC or something like that, right? Or some comics, right? And they're going, oh, you know, but the baby boomers are disgusting, right? They're sitting on so much money, they should give me their house. And then fucking eyes are going like this, right? They're like yelling because they're so demonically possessed by how they're entitled to stuff. But what generation do you think would have had it the hardest, right? I have to actually think about this, right? I actually have to think about this. But Gemma, what generation do you think? Would it be the baby boomers? Would it be the people in the 90s? Do you think it would be the people today?
I would probably say, is it for property, is it investments, or?
Just in general, like buy?
I would say probably, I don't know why I'm saying this, but I'm going to say it anyway.
Yeah.
The people of today.
Would be harder?
In the sense of, in like going up against the economic conditions.
Yeah.
So in the whole sense, like back in the day, one parent could go to work and the other could stay at home.
Yeah.
You can't physically do that anymore. It just isn't possible. You would need, only one income to get a mortgage. Now, if you have two, you're still lucky to get a mortgage for your dream home or wherever you want to live. People are now turning to buying investments to help servicing and getting a portfolio, but that's so far out of people's realm of reality to go and buy a portfolio. So I think there would be a lot of people in today's society, and maybe it's my generation, that what do I do? I haven't got any options.
Actually, I was thinking of it as you were answering and I asked you the question. I was actually thinking it in reverse, right? And I was thinking, who would have been the best generation and who would have been the best benefited, right? I'm going to answer that, right? Because I actually had a cool thought about it as you were saying that, right? I would probably say that people today would be hurt a lot because they're getting themselves into a lot more debt, right? They're taking on the risk of the debt and having to pay a lot more to get into the asset, right? But that's only in some markets, right? So if we look at areas like, I'm just going to make up some locations, right? I'm going to go back through history, right? Because we know our markets that we're picking up stuff that's cheaper, like 30% cheaper than what it was 10, 15 years ago, right? We're buying in capital cities for under 200,000, cheaper than what it was, 10 years ago, whatnot. But if we look at the Gold Coast, right? Buying in the Gold Coast today would be stupid. Buying in the Gold Coast 5 years ago would deem to be stupid, right? But I could be picking up something for the same price someone was paying 15 years ago. 15 years ago, they were paying 8% interest rate, 9% interest rate at the bank. Today, I might be paying 6% interest rate, 5% interest rate, right? So someone has held a property for 10 years, right? And I've got the ability to go and pick it up today for cheaper than what the person had picked it up for 10 years prior. The rent that they had was $200 per week, but now it's $300 a week. So the interest rate's cheaper, the rents are higher. I've had a surrogate parent holding that property and taking it through 2 market cycles for me. And that's the opportunity. So even though it might seem hard and difficult today for people, you can still buy properties for 100 grand, 200 grand, right? If I was to think about the generations that had it the best, right? I would say I'd love to go back to 92, right? I was 7 years old at the time. I'd love to go back to 92 when the interest rates were 18% and whatnot, and Paul Keating said the recession we had to have. Because off the back of that, you could have picked up properties for like 50 grand, 20 grand in capital cities in Sydney and whatnot. I remember in the late 90s, you could pick up this 50k in Western Sydney and Mount Druitt areas. So being able to go back and pick up those assets, but what would someone have said in 1992, right, about the property market? They would have been like, oh, interest rates are fucking 20%, right? Better jump out the window, right? Did you know that when they say the blood on the streets, you know what that is? When there's blood on the streets? Because in the 1930s and 1929, all the stockbrokers would lose so much money they would suicide by throwing themselves out the window. And
That's cheerful.
That took a very weird turn, right?
It did, very quickly.
But it's just a random fact of the day, right? So it's the term blood on the streets, right? But in the blood on the streets in 1992, people would have been like, I don't want to buy that. Interest rates, everyone was going bankrupt, right?
What was the income like, though?
People were earning like nothing. They're earning like 20 grand a year, would have been like a 70 grand a year income now.
Yeah,
right?
it's relative.
So it's all relative. But I would have been able to get the asset without paying the overinflated price, right? And today people have the hard problem because the prices are so far inflated. You got to pay that mortgage off. You're getting more and more indebted and enslaved in that deal. That's why the smaller ticket items it's becoming harder and harder to build the large portfolios for people because they have to go and get themselves into 10 mil, 20 million worth of debt, which is, their income won't support. So there's a sweet spot which has worked throughout when I first started investing in 2003, all the way up until now, 20 years later, which is 50, 100, 200, 300 grand. Above that, it becomes harder and harder to build a large portfolio. So I think besides the benefit of buying in 1992, I reckon the next best time would have been probably around the year 99 or 2000. That was just before I got in. And that was before, that was around, you had terrorists, kaboom, there goes 9/11, right? World's in a spin. We've got the .com, the Y2K bug. Everyone's going to die because, the Y2K bug will disintegrate everyone because too many people watching this and they won't understand what happened in 1999. But when the computers rolled over in the new millennium, it clicked over and they were scared that they only did in the computer systems and everything ran off computers. So fridges, computers, computers run water, sewer, all that. Aeroplanes would fall out of the skies, what they feared because the year 2000 they thought it would reset and wipe everything from the computer. So it's called the Y2K bug. You ever heard of it? You never heard of it?
No, I'm significantly younger than you, Nathan.
It's called a Y2K, right? Just Google it, right? If you don't know what it is, Google the Y2K bug. People were shit scared of it. I remember going into a second-hand shit shop out in Mount Druitt, like a pawn shop, like a shop about 3 years ago, and they had a generator and it said Y2K compliant, right? It's like a generator, poor petrol. People were so fearful. Y2K, there were so many things in the market, but at that time, the economic conditions would have been much better. In hindsight, everyone would have been scared. And we're looking today, what are people going to be looking back now in today and saying, fuck, I wish I could go back and buy a property for $1 million in Sydney, right? Because they're going to hyperinflate the currency, they're going to devalue the currency, hyperinflate everything, and it's very obvious what is happening out there. But to the common man, common woman, it's not that really obvious. So, my last question before we wrap up for today, and when you're always on, we always talk a lot. Right?
I'll take it as a compliment.
3 most common questions of this month, right? What do you think you want me to answer?
So it triggered one when you were talking then about picking a property up for less than what it was 10 years ago. And I don't necessarily get asked it. But when I'm saying that on the phone to people, I hear the silence of okay, that's great, but how does that happen? So maybe that ties into how are we getting them so cheap and why are they losing value if the currency is inflating? How is it going down?
Thing, right? So there's very few things that you can buy cheaper today than what they were 10 years ago. So you want to buy buying things of value. Not everything goes up in a linear fashion, and there is things that impact markets. So if you look at Sydney, 2016 units in, let's call it, I'm just going to say Parramatta, right, for example, it's a big place, 500 grand, right? And you pick up at 350 today for the same 2-bedroom unit. It's well, that is good value, right? 350k, you can't build a 2-bedroom unit for that sort of price. The rent isn't the greatest, but the rent's still on the way up. The lack of stock in the market is pushing it back up. But there was reasons why those markets dipped at that period of time. It wasn't because the economy was perfect at the time, right? Everyone thought the economy was great, but why did they go backwards, right? People think that those properties won't go up in the future, right? It might be a unit, it might be whatever. If you look at a unit, for example, at 500 grand and a house at $1 million, right? If the house doubled to get to $1 million, that means 10 years ago the house was still 500 grand, right? So if the unit doesn't go up, does that mean that the unit and the house used to be the same price, right? So we need to look at what's driving the economy. If we go to areas like South Headland, it was because all the lenders pulled out, the mines shut, there was no one renting, and it was just free fall, right? And you'd have to buy the property cash at 50, 60k. If we go and look at areas like the Gold Coast, the market just was very hot and the GFC occurred, and then the market never recovered. So the market in Queensland, in southeast Queensland, between 2003 and 2009 took off. But if we look at the market in Sydney between 2003 and 2009, it actually crashed, and when the GFC came, it took off. So not all markets are tied together, and they're not all linear. So it's finding and understanding what drives the market, finding and understanding the parameters around that, finding and understanding the pent-up demand that's there to push the market to the next level. And I was actually documented on saying it on that Sunday night program on Channel 7. I was in a helicopter going over the Gold Coast, and I said in 2018, I think it was, that the best value market was the Gold Coast, Southeast Queensland corridor. I said when the market takes off next, that will be the first market to take off, and it did. And so we want to be finding those sort of markets that are similar to what the Gold Coast has in 2023 and moving forward. So that's what I look for. How do I get them below market value, I guess, is the other part of the question. Is like, good relationships with real estate agents. I've done over 15,000 real estate transactions in the last 20 years of being an investor. Out of that, I would have spoken to many more times agents than that. So having those relationships, agents know when they come to me that I'll buy in any sort of market. The shitter the market, the better that I'll buy from them. So I'm always their backstop, and I'm in their speed dial on their phone. So I've got that aspect to it. I identified, like, there was a deal we did today, and it was a deal in a location for $157,000. I own in the same block. I've owned there for like 10 years. And it's worth like $200,000. Bought it for $157,500, and the owner actually has 4 properties. Right, the agent doesn't like me, so they didn't want to deal with me. So I got an agent to conjunct with this one. Right, so I don't know how they'd split it up. They might give like 20% of their commission, $500 or something, to the other agent. The other agent didn't want to lose his commission, right? So he went to the owner and started selling the clients directly to our clients, right? One agent has negotiated a deal at $157,500, but they're dealing directly with the agent and the client, right? We've got our client speaking directly with the agent, and the agent's trying to undercut his colleague, right? At selling him for $150,000, right? So the owner is going to lose $7,500, right? But the agent doesn't have to split his commission for a couple $100, right? And that's because the agent is after his own vested interest, right? Yeah. So when you work out how agents work and you understand what's happening in the markets, you've got a good knowledge base, really. So I guess anyone can do it if they're committed to spending 20 years and researching these markets, going and building those relationships. But I guess when someone comes to us and they use our services and they're getting it below market value, they're paying a fee for buyer's agency, but they're saving themselves $20,000, $30,000, $50,000, $100,000, whatever it is on the property. So other questions?
Another question I think I would get asked a lot actually is how you decide what to send someone, and why are you sending them that particular property? Do you have a criteria? Do you have a formula?
So how I do the deals is I locate and negotiate all the deals. I've constantly got maybe 300 to 500 offers out at any point. Got good processes, systems and procedures in what I do. And once I get an offer accepted, the team puts together the cash flow sheet, the RP data report I send out to my clients. On that point, like, I'm always sitting there going, okay, I've got a deal now. I've got my investors that I'm working with that are ready to go, right? So we've got our investors, a lot of people may not know this, but we have, I can even work with like 10, 15 investors at a time. You might buy it today, and then you may not do anything for 3 months. Gemma will then go, hey Nathan, this person's ready to go again. So at that point that I'll be like, okay, what does this investor need? I've got this property here. Who is it best suited for? If I've got 2 people wanting the same property, I'll go to the first person, present it to them first. If they don't come back to us in a timely manner, then I'll put it straight through the next person. When I send a deal, I don't send it because, hey, here's a cool property, like a brochure to everybody. I send it to the investor because I see it performing a task of what they need for the next step on the journey. So an investor may need cash flow for the bank to lend them more money. They might need equity for them to be able to pull out for the next deposit. Some deals are more tailored towards that. What bank are you using? What is the lending requirement of the bank? What is their policy internally? So the deal is, it's easy for people to buy 1 or 2 properties, right? They can go buy a property. I can say, hey, buy this property, it's cheap. But if that property is going to, checkmate someone and keep them trapped, well, then it's no good. We need to find the property that's going to keep opening up the finance for that person's position. So that's why I send the property to help them get to the next level. So,
cool.
Yeah.
Several times today that is it actually still possible to achieve rental income that will replace their active income? Can they actually retire on property
It's
now?
like 50, 100 grand.
50, 100 grand, yeah.
Cool. Well, I guess looking at, the current market, if we go back by 2009 when I quit my job, right? My portfolio was negative $40,000 a year, right? And within a period of about 18 months, I was able to turn that to positive $30,000 a year. That gave me enough money to go, okay, well, my basics are covered. I could quit my job. But rents were only $200 a week at that period of time, right? Interest rates were still 7%. So looking at the market today, those things have just blown up a heap in cash flow perspective. But is it still possible today? I look at, for example, one of our staff. A lot of people still reference to Linda, right? Linda's been with us for like 10 years. She was on Koshi. She's the lady that was on Koshi that everyone loves. And I remember when she built her portfolio, right? She got to like 20 properties, and we were sitting there one day, and interest rates had dropped about 3%, right? Just up until about maybe 4 years ago, they'd fallen down. 5 years ago, they'd fallen down. And I remember turning to Linda and I was like, Linda, you've got $3 million worth of debt, roughly, right? The interest rates have come down 2%. 3 million at 2% is $60,000 a year better off now, right? But she didn't have the assets, it wouldn't have happened, right? And then now I was speaking to her, we were laughing the other day because her rents have all gone up like $50 here, $80 there, whatever. And it's like, I guess her interest rates have gone back up, but the rents have been dragged up, right? So then when we look back in another year, right, interest rates have gone up. A lot of people are fearful of interest rates now because they're sitting there going, they were like 3% last year, now they're 6% now, and they're all scared and shit. And it's like, well, that's just part of the cycle, right? But what happens, interest rates gone up for 10 months, big deal. It is a big deal for a lot of people. But what happens in a year's time or 6 months' time when the interest rates drop, and they could drop at 3% in 3 months or something like that. So when the interest rates do come down, we're going to have a lot of investors at a neutral cash flow. Right? They've put their rents up $30 a week, $40 a week, whatever this year. But when the interest rates come back down next year, all the people who just bought for in the last 2 or 3 years are going to have their neutral cash flow property portfolios turning to positive cash flow, giving them 50 grand a year. So I guess for you to be able to still do that and build that cash flow, you need to be able to obtain the debt to be able to buy the assets. And they need to be affordable assets without massive mortgages that are going to carry for a big period of time. So as long as you can buy properties for 50 grand, 100 grand, 200 grand, 300 grand, 400 grand, under that 400 grand price range, for as long as we can do that and the properties are neutral cash flow and covering themselves, well then yes, it's going to be possible to be able to do that. How many clients do we have that have bought double-digit portfolio in the last year, 2 years, 3 years, right? There's lots and lots of people that have done that.
Yeah.
So if you can build up a portfolio of 10 properties, just say that you can buy 10 properties, right? They don't take in the silly ones that have got 20, 30s. So if you can buy 10 properties in the portfolio, those 10 properties are neutral cash flow today. If in the next 3 years you can push those rents up just by $50, right, in 3 years, that means that you're going to get 10 properties, $50 a week, $500 a week, which is $26,000 a year passive income. If in the next 3 years interest rates come down by 1%, 2%, 3%, well then that could be giving you another $50, $80 a week in your portfolio. So that could be a total of 50 grand a year, 60 grand a year, 70 grand a year. So it's still very possible to be able to do that. Just tying that back to when is the best generation, right? That didn't happen many years ago, right? The inflation wasn't there. The inflation is your friend in being able to build wealth. The inflation is very beneficial to all our investors. So as long as we have lots of inflation happening, the more inflation we have, the better it is for our investors. They're going to be performing a lot more because the assets are being inflated away, the rents are being inflated away. So to answer your question, is it still possible to happen? Like we've got investors that have got passive income now. I'm not even talking about the ones that don't, just if they have neutral positions, they're still doing it right now. We've got our investors from 5 years, 8 years ago, they've now got good passive income. We've got our investors from 2 years ago, which are creating passive income. And it happens every day. If you've got a property that's putting $50 in your pocket, how many of them do you need to retire? If you've got putting $100 in your pocket, how many of them do you need to retire? And it's not just linear. Sometimes people come and say, well, I'm going to need 87 properties to be able to hit my income goal. Well, no. you're not factoring in what about pushing up rents? What about debt consolidation at different points? And that all falls into a part of the overall strategy. And I guess a lot of people, as we wrap up today, probably asking, how do I get a strategy? How do I know more about what we do? I always rattle this off, but it's more fun today that you're here, because if you do want to get in contact with us, you can keep listening to these podcasts, watching us on YouTube, listening to us on Spotify, Apple Play, Google Play and whatnot. But you can call our office, which I always say, 1300 367 925. But Gemma will be on the other end of the phone. Jeremy will be on the other end of the phone. Charlie will be on the other end of the phone. So you've got the investor relation team there to help you. So if you do, want to have a chat with Gemma, it all starts with a conversation, right? And people call us. A lot of people do nothing. A lot of people do stuff. But Gemma doesn't bite. And a discovery session depends.
But I think people don't realise either that a free discovery session is actually more of an analysis of your position. So a lot of people, I imagine, probably don't know what they can do. Some people don't know what their goals can achieve. I ask people, what is your goal? They don't know what it is. We can help brainstorm what is possible, whether we can actually help. If we can't help, we have affiliates. We can get you to the right people. So it's more than just a chat. If you want a chat, I'm absolutely okay with that. But we can do a free analysis of your position as well to see if we can actually get you into the market.
And the cool thing about when you call the 1300 367 925 number, right, is that it's cool that I can sit here and tell you, yes, I've bought hundreds of properties. Yes, it's cool that I can sit here and tell you other people have bought lots of properties. But Gemma came to us 3 years ago, had no properties, thought she couldn't ever get a property.
Stone broke.
And Gemma's building her portfolio and entering into that club of 0.001% of Australians that have 6 properties and getting to 10 properties. And you're talking to my team, which are doing it real time as we speak, building their portfolios. So with that, thanks a lot for everyone for listening and watching and taking the time out of their day, and we'll catch up shortly. And thanks, Gemma, for coming.
Are we high-fiving? Yeah.
Podcast. There we go.
Yeah, like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar about to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you've been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system. Enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all telling lies, I know what they been telling you. I'm the opposite, the Donald Trump of Australia. It's amazing, there for the taking, my time is never wasted.